This video will help you understand the most recent updates to the Washington State Tax Code. If you don't know who I am, my name is Chris Dime. I'm a financial planner out of Edmonds, Washington, and I specialize in working with folks to and through retirement. Washington State just passed some recent legislation, specifically Washington State Senate Bill 5813. It implemented three main changes to the Washington State Tax Code. Number one, an increase in the estate tax exemption from $2.2 million to $3 million. An increase in the top tax bracket for that Washington State estate tax from 20% up to 35%. And then lastly, an increase in the long-term capital gains Washington State tax for those of you who generate in excess of $1 million of long-term capital gains. If you want to know more about each one of these new provisions, stick around, let's jump in. Washington State is one of those few states out there that do not impose a state income tax. That doesn't mean, however, that they don't tax you in other ways. From higher than average real estate transaction taxes, to higher than average sales taxes, to higher than average real property taxes. Now, the property tax rate is actually lower than the national average, but the real dollars that come out of that tax are much higher. And that's just because Washington State property is generally far more expensive than other states. Oh, and don't get me started on the 2021 Washington long-term care income tax that was implemented, which they call a payroll tax, which is technically a little bit more accurate, but it's a 0.58% tax on any wages earned that contributes towards Washington State's long-term care insurance fund. For more information on that, I'll link above to an explainer video here. But all of that brings us to the most recent Washington State Senate Bill 5813 that implemented three main changes to the tax code, and we'll jump into those. First, let's start with two of the certainties in life: death and taxes, which in the context of this video refers to the Washington State estate tax. For a background on the Washington State estate tax, I'll link above here to an explainer video, but ultimately the exemption used to be $2.2 million, meaning if you die in Washington State with a net worth of less than $2.2 million, you really wouldn't have to worry about this Washington State estate tax. That exemption level is actually getting raised to $3 million. So now you get to accumulate a little bit more net worth in Washington before the estate tax comes into play. However, once you are subject to the Washington State estate tax, it's actually going to have an increased level of taxes. And that's because the top tax bracket for a taxable estate in Washington is going from 20% to 35%. Historically, Washington State had an estate tax rate between 10 and 20%, depending on how much money you had above and beyond $2.2 million. Now, looking at $3 million as the threshold, those tax rates climb much faster, where originally it would top out at 20% once your taxable estate in Washington was over $9 million. Now, if your taxable estate is over $9 million, then you're going to be subject to a 35% estate tax rate on those dollars. Now, to clarify, it's not a 35% flat tax on any taxable estate above $3 million. It's only the amount above and beyond $9 million of a taxable estate. So simple math would be, if your estate is worth $12 million, you'll probably have a little bit of 35% taxable estate tax. The floor is still 10%, but the range up to 35% obviously brackets up much faster to get to 35%. So now in Washington State, if you are subject to the Washington State estate tax, you're going to pay a blended rate most likely between 10 and 35%, whereas before it was between 10 and 20. And I'll link below to the new brackets if you want to visualize what I'm talking about. Sometimes taxable estate is kind of hard to understand without looking at sort of like a graph. But just to reiterate one more time, the estate tax is only a tax on the amount above and beyond the new $3 million exemption. So anything above and beyond that, that's going to be subject to these new estate tax rates. Good news is the $3 million exemption is supposed to increase with inflation over time, as was the $2.2 million exemption, only we don't have 2025's numbers, so we're kind of going off of previous years using $2.2 million as an exemption. These new higher Washington State estate tax rates now allow Washington State to be ranked number one in most expensive states to possibly die in. And that's because no other state in the entire United States has an estate tax rate higher than 35%. Washington State beats them all once these new rules come into play. And that's not even factoring in whether or not your estate will be subject to the federal estate tax rates, which just add on top of the Washington State estate tax that you'll owe. And yeah, that does mean you could be in the 60% tax rate for your estate if you die within federal levels, which federal levels, last time we checked, was around $14 million per person. So $28 million as a couple or $14 million as a single individual. If you have a net worth over those thresholds, you'll probably owe some federal estate taxes. And if you die in Washington state or you die with property in Washington state, then you'll probably be subject to both federal and Washington state estate taxes. Now, I know you might be thinking it's a bit morbid, but why don't I just move out of Washington state the day before I die? And Washington state has already thought ahead of that, and they will actually consider you Washington state estate tax taxable if you have property domiciled in Washington state. And so on the contrary, you might be thinking, well, why don't I die in Washington state, but only own assets outside Washington state? And they'll come back and get you there as well. They will essentially have you consider from an estate tax calculation standpoint, all those other properties owned outside Washington state as being part of Washington state. Now there's a more complicated calculation that you can do to be on the scope of today's video, but essentially Washington state does find a way to tax you on those assets as well. So really the only way to avoid this Washington state estate tax is to both physically move out of Washington state and domicile somewhere else, and move all of your property outside of Washington state as well. Keep in mind though, there are a number of other states that implement an estate tax. And if you're unfortunate enough to die in some of those places, you'll probably be back where you started, paying an estate tax of some kind. And a lot of other states have lower thresholds, like Oregon, for example. Instead of a $3 million exemption, they have a $1 million exemption. So it may or may not make a lot of sense to move anyways. The last major update to the Washington state tax code is going to be the Washington state long-term capital gains tax rate. Originally, back in 2023, when this new tax was implemented, and I'll link above to an explainer video here, the tax rate was a flat 7% on long-term capital gains generated in excess of $250,000. Now, this long-term capital gains tax did not apply to, real estate that had some appreciation in it, nor would it apply to those who were selling their closely held business, for example. It was mostly targeting things like stocks. And that $250,000 exemption was per household. So it doesn't matter if you're married or single, the entire tax-paying entity only got a $250,000 tax break. So for example, if you sold some stocks and generated over $300,000 of long-term capital gains, not only would all of your long-term capital gains, all 300 grand, be taxed at, probably 15 to 20% on the federal level, but also in Washington state, 50 grand of which would be taxed at a 7% tax rate. The new update to be aware of is for those of you who generate long-term capital gains in excess of $1 million will have an additional 2.9% added on top of your 7%, effectively a 9.9% tax rate, because 10% was too hard to round up to, a 9.9% tax rate on any long-term capital gains generated in excess of $1 million. Okay, so from a calls to action standpoint, I think the biggest change here is going to be on the estate tax front. For those of you who currently have net worth in excess of $3 million, or from your financial planning project that in the future, sometime reasonably soon in the next few years, you will be in excess of $3 million of net worth, it's absolutely going to be crucial that you either revamp your estate plan or at least review it to make sure all the provisions help you minimize that estate tax. And I'll link above here to an explainer video on a bypass trust. It's probably the most common avenue of approach for those of you who are looking to mitigate the Washington state estate tax. There's of course some other more advanced estate planning tactics you can do, and there's simple gifting you could always implement as well. But I think the estate tax is probably the one that's going to affect more taxpayers than the updates to the long-term capital gains tax. That being said, if you work at a company that is heavily stock compensation based and maybe a ton of restricted stock units exist in your investment portfolio from years past, and those are starting to accumulate capital gains, in the same way one might implement what's called tax bracket management in retirement, where you turn on and off certain income streams to keep your effective tax rate low. This new update might also come into play for you as you're looking to mitigate taxes. You probably don't want to move in the direction of just hammering away all of your long-term capital gains in one fell swoop. You might have to do some piecemealing, assuming there's a number of embedded gains inside there in excess of $1 million. So hopefully this was helpful. I think for the vast majority of Washington state taxpayers, this will not affect them directly. However, for those of you that it will affect, if you have further questions, you can always drop them in the comments below or get in touch on the website. We'll help you get squared away. Have an awesome rest of your day. We'll talk to you later. Bye.